Hello. Today I'm going to talk about reoccurring buys and a possible scam that might be underlying the whole principle. I say possible because, well, it's legal. It's legal and you agreed to it when you signed up for whatever brokerage you signed up for. That doesn't mean it's right, but it's legal. Let's start with the basic premise of your own checking account or savings account, doesn't matter. Your account earns a certain amount of interest, either per month, per quarter, or per year. You get paid so much interest. How much is debatable on the basis of how much they make off of your money, but nonetheless, you get some form of interest on a regular schedule of what you have in your account. All accounts follow that same basic principle. Personal, business, custodial, or trust. It doesn't matter. All accounts follow that very basic premise. So let's take the reoccurring buy. We want to buy $5 of Bitcoin once a week. No matter what its price is, buy $5 worth. Sounds fine. It's a great way to invest. You don't have to worry about it. It happens automatically. All you have to do is just let it do its thing. What could be wrong with that? Nothing, really, if you understand what you are actually purchasing. What are you going to get out of buying $5 of Bitcoin a week? Where do you actually get your profit? Now we start looking at this whole situation in a very different light. You spent 52 weeks at $5. That's quite a bit of money. The market's gone up, it's gone down, it's gone left and right, and it's done some crazy stuff. The last year alone, it's gone from 65,000 down to roughly 16,000. And you've bought every week faithfully your $5 worth. Nothing wrong with that. Good investment, good sound strategy, dollar cost averaging at its best. But when do you take your profit? When do you actually make your money for the amount of money you have invested? Think about that question while we talk about how the exchange has made its money. And it could be exchange or brokerage because this also applies to the stock market. There are a few exceptions with the stock market, though, more so than the cryptocurrency market. But nonetheless, the principle is the same. When do you get your money out of a recurring buy? You see, they're making money every time you make a purchase. Every time you go through your automatic once-a-week purchase, you're being charged a taker fee or a commission. They're making money there. But they're also making money on interest by keeping your money in a custodial or trust account, along with hundreds of thousands of other people that are their customers. They're making money on interest every single day. Think about that. You're trying to make money by investing. They're making money on you and everybody else, and then they're charging you a commission or a fee for you to make a purchase. You're being charged to use your own money. Let that sit in for a few minutes. And then go back to the question, when do you actually make money in this process? When are you going to get paid for the amount of work you've done? You're not. The truth of the matter is, if you get charged a fee for every deposit that you make because the purchase takes place right then and there, they're hoping you never withdraw your money, because the more you deposit, the bigger that custodial account gets. The more interest it makes every single day based upon the amount of money in that account. Their goal isn't for you to make a profit. It's for them to profit on you. And when you think about selling it, you have to pay a fee, and quite often you'll have to pay another fee to actually withdraw it. So how are you actually making money? You're not. And that is the scam of reoccurring buys. Now, there is a way that you can make money, although they're still going to make interest on your account, and they're still going to charge you a fee or a commission based upon your activity. But there is a way you can make more money and actually make a profit. See, reoccurring buys are bad in the respect that they purchase every single week or whatever you set automatically without respect to the actual price you pay. That's where the gimmick or scam really takes place. So let's demonstrate that. Let's say you purchase Acme widgets for $2. So we have $2 of Acme widgets. Okay, now the next day comes and you purchase another $2. You have $4 in the actual asset. But if your purchase price is lower, then your average is going to be lower. That's good. So let's say your purchase price on day one was $10. Let's say your purchase price on day two is $5. Well, your average is $7.50. Your average is below your purchase price of your first position. That's what you want. The market is going down, you're getting more for less. You actually have a way of making a profit. But let's see on day three, let's say the price goes back up to $10. Well, now you have a situation where your average is going to go back up if you make an automatic purchase. So 10, 5, 10 is 25. 25 divided by 3 is what? Let's see. 8, 16, 24, roughly $8.25. So you've gone from an average of $7.50 to an average of $8 and roughly 25 cents. Your average has gone up. You can't make a profit if your average raises. You can only make a profit if your average goes down. So let's say we're back at our $7.50 average. Let's say the price drops again. Let's say it drops to $2.50 and you make a purchase. Well, now your average is going to drop because you have 2, 5, and 10. So 2, 2.5, 5, and 10, we have 15, 17.5. 17 divided by 3 is what? That would be roughly $6.50 or so, somewhere in there. We'll just go over $6 for easy math. So now you started out at 10, Your average is $6. Now let's say the price jumps up on day 4 to $9. Technically, you have a $3 profit if you sell. But a reoccurring buy will just purchase $9. You won't get the profit. They get the interest on the account, but you don't get the profit. That is the gimmick of reoccurring buys. That is the scam of reoccurring buys. It's set up in such a way that they always profit on your interest and they profit on you making the purchase. But you actually never make a profit in what you do. Because in order to make a profit, you must make a sell. Take some time and really think about how much money is being made around the world in every exchange or brokerage or investing app that pushes reoccurring buy as the principal way for people to get into the market. And think about all of these reoccurring buys where sales aren't actually discussed. How much money is really being made by the businesses versus the people, the investors, simply trying to build a better future for themselves? Now let's finish this entire video talking about the biggest scam that turned out to be in the crypto market. Money laundering, backroom deals, ghost modes, god modes, whatever you want to call them. Hundreds of millions of dollars stolen. The most recent number I've read floating around on the internet is $40 million. Now think about a custodial account or a trust with $40 million. How much interest did that account make every single day from all of the thousands of people, if not hundreds of thousands, if not millions, that had money in that account through their own services? How much interest did they make? Even if you take the worst, weakest, most pathetic bank on the planet that paid nothing for interest, except for maybe 1/10 of a penny. Every day compounding, they made money, hand over fist. And they charged their users every time they bought and sold. And in fact, the US version had the second highest rates in the nation of any exchange. Yes, I am talking about FTX. So they made money by charging users. They made money by the interest earned on their custodial accounts. And yet they still robbed hundreds of millions more. How many users thought they were investing for their future with reoccurring buys, only to be screwed in the end? That's the most disheartening fact about reoccurring buys, is there's no way out. They don't give you the option to automatically profit when the price is above your average. You just keep buying all the way through, no matter what. Your averages go up, they go down, whatever. And you don't actually see your money actually profit. Nothing comes back to you. And if you try to take your money out, you get charged a fee. If you try to withdraw it, you get charged another fee. Recurring buys do have a place, and there are legitimate ways to use them. Cryptocurrency is not one of them. And even most of the stock market isn't viable either. Now, there are some exceptions, as I said earlier. Mutual funds are an exception, but they are required by law to tell you that you are going to be charged a penalty fee if you withdraw early. Before you can actually purchase a mutual fund, you are told up front that your money is locked for X number of days, and if you take it out ahead of that schedule, you will be charged a penalty fee for that. That's all fine and well. You're told that. You know that. And the mutual fund gives you a dividend. That dividend can be monthly, quarterly, or yearly, but you get a very generous dividend. The reason for that mutual fund is you are trusting somebody else through a large fund to be able to manage it to maximize your investment with a clear path of profit. That's something that is legitimate. When you purchase a stock with no dividend on recurring buys, what are you getting out of it? No dividend, no income. There's no value to it. 90% of the cryptocurrency market is the same way. Most cryptocurrencies have no value outside of trading. If you just buy once a week for Bitcoin, why? Are you falling for the hype of it going to the moon? When you sell, look at all the people who kept buying week after week after week when they hit $60-something thousand, and now they've lost 75% of their holdings because they didn't sell on the opportunity. They bought the scam, and now they're part of the scam, where the only thing they can do is flood Twitter, trying to get other people to buy it so they can raise the price back up, so hopefully they might be able to get out of it without a loss. That is the dangerous side of reoccurring buys. And that's why you really shouldn't do it. You shouldn't automatically purchase just blindly every single week without keeping track of the price and how much you've purchased. You should track your average. If the price is above your average, don't buy it. Only buy when the price is below the average of your purchases. And now with modern day spreadsheets flooding the market, even for cell phones, there's no reason why you can't do it. Why you can't track what you've actually invested in. You can't stop a company from making money on your holdings that they keep in their account. But you can at least make sure you get a legitimate profit out. You can make your money work for you as well as them going out of their way to make sure they get their piece of it. You can think about the rates you pay for your commission or your taker fees and then plan above that to figure out how much you actually get. For example, if you have $100 worth, if you have 1% take profit, meaning the price goes up 1% of your average, you sell it, you walk away with a profit, you start over. It's a simple process. You don't need to read a chart. You don't need to figure out the chart. You just purchase in steps. For example, if you have $100 and you want to purchase 100 positions, all fine and well, you want to purchase Acme widgets and say it starts at a price of $50 for the first day of purchase. Okay, that's good. So you got a $50 purchase. A simple way to make sure you stay ahead of the game. Don't just purchase it again blindly. Think about when you want to purchase it. And the easiest way is, say you only want to purchase it when the price drops 3%. Okay, that's all fine and well. So the price drops 3%, you make another purchase, you refigure your average. The price drops 3% again. And you keep doing this until the price jumps above your average. For example, if it jumps above your average by 3%, well, you've made a 3% profit on your total investment. You've made a real profit that you can then reinvest or cash out if you want, as long as you're above what you paid for your commissions or your fees. And you can figure that into your actual prices as well, so that when you do cash out, you know you have a legitimate fee coverage, a legitimate commission coverage, and you know the money you're getting out of that trade is actual real profit. That is how you can make this game work for you. Not just blindly buying every week and not paying attention to the prices. You will never profit in that. But by taking responsibility for your trading, by tracking each and every purchase on a spreadsheet that you can have on your phone for free, you can actually figure out when to take profits and set that up appropriately. It doesn't take a lot of time to do. You don't need fancy mathematics, and the spreadsheet does all that. You just need the willingness to take responsibility for your own finances. And you should already have that, just because you have to survive on a day-to-day basis. Investing is not difficult, but if you trust somebody else to do it for you, you're not going to come out on top. Reoccurring buys is the perfect vehicle that has been in use for the last 10 years for getting into investing that doesn't favor you, the investor. All the reoccurring buy does is make sure that people offering it make money on you. You can change that with just a few minutes a day and doing your own purchases, where you actually can make a legitimate, decent profit on what you're doing. There are exchanges now that are actually honest about the practice and say, we don't charge you a maker or taker fee, or we don't charge you a commission, because we are making money off of your money. We're making interest for holding your money. There are a few, very few, that are very open and honest about it, but most of them will lie to your face, because they know you don't know what's really going on. And that's what I'm hoping that this video will make clear. Now you do know what's going on. And now you know that through your dedicated reoccurring buy every week, you are being screwed. You are being put in a situation that you can never profit from. If you purchase above the average, you're raising the average. You never have a clear exit. And that's the gimmick that reoccurring buys unleash. That's the scam of the reoccurring buy. And they know it. They know that most people that use this format will never take the time to figure out how to actually and properly get out of the market. They know that somebody doing this, they're going to need their money. They're just going to blindly sell it, no matter what it is or how much they've lost in the process, and cash out. How much do they actually lose could be quite substantial. And they don't care because they've made their money. You might care when you sit back and you think about everything you invested, and then you look at the price you sold it for, you might have lost 30% of the value you had. So basically, you gave them your money just for you to lose money because you didn't focus on the average. Beginners' mistakes will ruin you, and this is one of the classics. You don't need to be an expert to understand just how bad reoccurring buys really are. You just need to take a few minutes to think about your investment and realize you can never invest if the price always goes up, and that includes your average. This is an easy principle and one of the most basic fundamental principles in investing. And it's something that anybody can do without any knowledge or experience. Just discipline. Start out with a fixed budget at every percentage step. Make a purchase. When the price is above the average, don't purchase. Very simple. If the price goes above the average, X percent, sell it. Take the profit. And then look for an opportunity to get back into the market, or maybe even look at a different asset that is within your price range that you've researched. Very simple investing technique that will make you legitimate money over time. But you have to be willing to take the first step and want to take control of your finances. FTX is a worst case example across the board of just how it used and abused its users. The likelihood of some magic law fixing that is never going to happen. Too many politicians are all too happy to look the other way for the amount of money they were given. And those people will never see their money again. The sad part of it is, though, is the gimmicks that FTX used, the reoccurring buys. They roped people into believing their money was safe, well above and beyond the people that actually understood the risks of investing. It's disgusting all the way around what happened with FTX. But there is a certain level of risk that every investor knows that's taken time to actually understand what investing is. This goes beyond that because they targeted people that knew nothing, deliberately and maliciously. But this targeting isn't just exclusive to FTX. There are bucket loads of industries that flood the market. You see ads all over the place in Google Play or in the websites of invest here monthly, let your money grow, build wealth over time. And all of it revolves around the same gimmicks. Educate yourself. Do your own research. Take the time to learn. All you need is 5 minutes a day to really get into the market and actually make some honest money. You don't need to purchase a special program. You don't need to go spend money on a special broker or go purchase special news. Anything you need to begin investing is free. Learn, read, educate yourself, understand your risks, understand your budget, and most importantly, understand how you're actually going to make money. How do you actually go through the process of profiting? If there's no clear way of making a profit, you're not going to make a profit. And that's the first thing to understand in any investment program you use. How do you actually make your money? Well, I've rambled on this enough, I think. And I think that's the point that really needs to be gotten across. Think about your investing. Think about when you profit. If you have any questions, leave a comment, let me know. I'll be glad to answer them. Like, subscribe, share this video if you know somebody that's looking to get investing and wants to know how to do it. It's not hard. It's really not. You don't need a PhD. You don't need to be a genius in mathematics. You don't even need to be the greatest investor in the world to come out on top of this. Just need a little bit of practice and a little bit of education, both of which are free, as many good, reliable brokers provide demo accounts where you can actually learn risk-free. Take advantage of them. Educate yourself. Until next time.